Hi there, welcome to Kneppy Invest and welcome to August 14, 2024. We have about 1 hour and 30 minutes left of trading today. Overall, it's been a positive day, and that positive day has been led by companies who have released their results today. So we are in the middle of reporting month, and now we're starting to see pretty busy days. Many companies are releasing results, and that is definitely true of today. If we have a look at ComSec's reporting season calendar, it really started last night because a couple of companies released their results after the market had closed. Now, typically, and I use the word typically there for a reason, most companies will release their results before the market opens. Just typically, that is, I'd say, true for 95% of companies. And the companies who were supposed to release their results today, according to the ComSec reporting season calendar, were Lifestyle Communities. They released the results last night. Seven West Media, yes. Homeco Daily REIT, yes. Pro Medicus, yes, yes, yes. BWP Trust, which is Bunnings, yes. Charter Hall Social Infrastructure REIT, yes. For some reason, Australia has a lot of REITs. Commonwealth Bank, yes. Computershare, last night. Evolution Mining, yes. Emotive, that used to be called the GUD Holdings. I didn't realize that until the other day. Yes, Seven Group Holdings, which makes sense because Seven West Media released their results, and there's sort of a connection between the two. And AGL. Yes, yes, yes. So a few other companies also not mentioned in this particular encounter also released their results, and I'll go through quite a few of these companies. And the reason I'm going to go through the charts of these companies is because I am looking for breakouts. That is my focus this time of year. I'm looking for breakouts on the back of positive financial news because the benefits of breakouts in the share price of a company can last 6 to 9 months. Not always, but you can see the share price rally for another 6 to 9 months. So I have taken strategic positions in some companies who have released positive financial results and whose share price looks like it's breaking out. So some of those companies include AMP. Also, Life360, or it's already a share of that company, but they released results. Looks like share price maybe not breaking out is the right word for that company. JB Hi-Fi, I've taken a trading position in that company, and the share price looks like it's breaking out. So, and I should also mention Challenger. I talked about Challenger yesterday. So the focus of me when I'm looking at these results is, has the share price rallied and is the share price breaking out? And I have rules when it comes to breaking out. We're looking at or talking about a 3-month high, at least a 3-month high, share price increasing on positive financial news. That's an absolute tick because that's the whole reason I'm looking today. And also, I want higher volume. I want the market interested. So we'll go through quite a few charts today to search for potential breakouts. Tomorrow, who's releasing results? Tomorrow is Thursday, yes. Enero Group, chart looks horrible. NRW Holdings, I believe the chart looks okay for that company. Origin Energy, chart looks pretty good. Arena Reddit, no idea. Goodman Group, chart looks absolutely fantastic. Telstra Group share price has been on a little bit of a tear lately because they increased their prices. And Magellan Financial Group, Cochlear, and Orora, they released their results today. In fact, that company made it into my top 5 because share price did really well. In fact, my top 5 stocks is full of companies who did really well today. Okay, no tweets, nothing like that. So let's get stuck into the ASX today. Might have a look at some of your comments later in the video if I have time. So the ASX today, pretty good day apart from mining. Resources down 1%, Alltech up 2.26%. I'm pretty sure the Nasdaq had a pretty good day, up 2.5%, Dow Jones 1%. So we haven't really seen that good day on the American markets transfer to our markets. Maybe that's because of mining. I didn't really have a look at mining. Gold down, lots of, a few reds, a few greens. So let's have a look at gold. Gold's flat. Nothing to be concerned with gold. I'd like to see gold break above 2,475. That is a bit of a resistance level right now for gold. Nasdaq chart. Nasdaq has been on a bit of a tear the last 6 or 7 trading days. And if you look at the XGO, at that really big down day last Monday, fell 3.7%. And we still haven't quite got back up to where it was the day before. And that's after 1, 2, 3, 4, 5, 6 green days and 1 negative day. Just shows you how much more powerful fear is than greed. Things have turned around. Sentiment has definitely shifted in the market, yet we still haven't got back up to those levels because the market fell heavily in one day. Someone did mention the phrase I was looking for. Where is it? The phrase you are looking for might be stocks take the stairs up, but the elevator down. I would even say stocks take the stairs up, but jump off the or out the window on the way down, because sometimes stocks can fall rather quickly, like we saw last Monday. We'll say last Friday or Friday 2 weeks ago and Monday. Anyway, so let's have a look at the ASX today. Sectors and indices. We already know mining's had a pretty bad day. It does not include energy, up a little bit, but materials down 0.96%, and IT up a fair bit. Also, gold up a little bit as well. So that's probably has been helped by Evolution Mining, which is in my top 5 stocks of the day, by the way. So just by looking at this, I would assume iron ore has had a pretty negative day. That's one thing I did not look at. Iron ore. Where's iron ore? Here it is. Yeah, iron ore is down. Oh, iron ore's chart looks horrendous right now. It is at a really important support level right there. You can actually see why that's a support level. If you go back to April this year, it did bounce off about $98, and now it's right on $98. So iron ore is in or at a really important, well, maybe not important, but it is at a support level. In fact, that support level goes all the way back. Look at that, all the way back to May 2023. There was a couple of times when the price of vinyl got down to $98 and then it bounced. And then the next support level would be about $78, which is the lows we saw, or iron ore saw back in November 2022. So iron ore looks pretty ugly, the chart, and that probably is the reason why materials is down. So if we have a look at the ASX 20, I am assuming only up 0.39%. I'm assuming BHP, Rio Tinto, Fortescue are all down, and that has put a little bit of a handbrake on the ASX today, particularly the ASX 20. You can see it is down. It is up only 0.31%. Well, ASX 200 is up 0.52% because there's a higher weighting of BHP, Rio Tinto, and Fortescue in the ASX 20. I'd say maybe 14 companies up, 6 down. Well, 16 up, 4 down. And I'm assuming those 4 companies down are probably BHP, Fortescue, Rio Tinto, and I'm assuming either Woodside or Santos. I could be completely wrong. So let's have a look. And probably the best performing company is WiseTech, based off Medicus, REA Group, Goodman Group, WiseTech. There we are. So tech companies, in fact, the 5 best performing companies in the ASX 20 are all companies I own. Go companies I own. Let's have a look at the worst performing companies. Yeah, Fortescue, BHP, Rio Tinto, for some reason, National Australia Bank. Woodside Energy, yeah, Telstra's flat, Woodside Energy up just a little bit. So no surprise when I look at this list. Okay, let's have a look at the best and worst performing companies on the ASX. Starting at the top, Gators. Livehire, been taken out, or there is a takeover bid for that company. Up 91.67%. Funny enough, the takeover bid for that company is at 4.5 cents. So it looks like the market is expecting a possible bidding war for that company. I don't know why the share price is higher than the takeover bid price, but up 91.67%. You never know, it's up 91.67%. The market cap of the company is still 17 million. In the last year, share price is down 25%. I have a feeling, without looking at the chart for this company is going to look awful. Share price back in 2021 was as high as 46 cents. Now it's 4.6 cents. I'm not sure why the directors would say, yes, we should accept this takeover bid, unless they're confident the companies are not going to go anywhere and this is all they can get. Because if I'd been a long-term shareholder of this company, I'd be fairly disappointed that they've accepted this takeover bid. I'm pretty sure they have done that. Let me have a look. Livewire. That's right. There's a thing called Livewire. LVH board unanimously recommends all cash takeover offer. I would say this is an opportunistic takeover. The company has fallen a fair bit, and there could be value here for live hire. So that's all I want to talk about when it comes to live hire. Other companies in the best performing companies trading on low turnover: Provarus, Jade Gas, Australian Pacific Coal, a little bit higher turnover there. Looking down the list, Appen up 15.8%. I'd say the chart for the Appen is looking interesting. I had a look at this chart the other day. Someone actually mentioned in my comments, Appen's going broke somewhere. Appen will be bankrupt, says Jack Zerge. I actually do want to talk about that comment later in the, maybe not today, but in another video. But the chart actually looks really good. Really big volume coming in since the share price started to lift. I think this chart is looking interesting, to be honest with you. So this is, I don't know if this, I wouldn't categorize this as a breakout, but this is a chart that is screaming shift in sentiment, shift in trend in the share price. Okay, and no announcements from Appen today. It's just positive sentiment shifting for that company. Elsewhere, what else we got here? Nothing. So let's have a look at by market cap. We have 7 group holdings: Pro Medicus, Evolution Mining, and Orora. 4 companies who released their results today, all in my top 4 stocks of the day. The other company in the top 5 stocks of the day is the biggest company on the ASX, Commonwealth Bank of Australia. Other companies released their results. Bravura released some results. It looked like it was results, but was it really results? Yeah, results, yeah. I had a look at these results and I was like, okay, EBITDA profit, that's all improved, but their revenue is actually flat and they're actually forecasting revenue to be down next year. So the reason why they've seen improved EBITDA profits is because they've done a fair bit of cost cutting, but cost cutting can only last so long. Company needs to grow through revenue growth. That's the only viable way for persistent, consistent, long-term growth, revenue growth. It's one of the reasons why I always look at revenue first when I'm analyzing company. I need to see revenue grow. Bravura doesn't quite fit that right now, but we'll have a look at the chart for Bravura. Is this a breakout for this company? A pretty good day, but did not make it in my top 5 stocks of the day. And few other companies here, but none of these companies released results, including Electro Optics, Step One Clothing, KMD Brands, E-Roads, and Dimerics. Okay, so a pretty good day for quite a few companies on that list, and quite a few companies I do know. Now let's have a look at the top losers. And this Mosaic Brands ETF, for some reason, is showing up again. I have no idea what that is. It's something to do with Mosaic Brands. Anyway, we can move on. Most of these companies are fairly small and turnover fairly low. So we are looking for big companies who have dropped a fair bit, and I'm not seeing it in the worst performing companies today, which is a good sign for all those companies that released results. So results today did not surprise the market to the downside. That's a good thing, in my opinion, particularly if you're bullish on the market. And let's have a look at a list of companies by market cap, and nothing big here. Yeah, nothing big. Amero International, ticker code 3DA, down 9.21%. I do remember reading their announcement. It was sort of a downgrade. So they were talking about, in fact, let's have a look at it. 3DA. They were talking about down 11.8%, by the way. Amero updates financial guidance. So you can see why I looked at this announcement. Updates financial guidance. Ooh, that's a sort of title I want to have a look at, that announcement. And this was a downgrade. So apparently this company expected to be, where was it? Talking about capital expenditure, a little bit higher than normal or what they expected. Oh, so they were expecting to be EBITDA break even in calendar year 2025. They've pushed that back 1 year. Now they expect to be EBITDA break even in fiscal year 2026, so 6 months later. So it's a slight, I wouldn't say, can we call this a downgrade? Yeah, I'll call this a downgrade. So if they actually put out numbers, like EBITDA numbers, expectations, those numbers now would be a little bit lower. Or maybe they would be a little bit lower. So a little bit of a downgrade from Amero. I have no idea what the chart looks like for this company. And it was looking pretty good for a while, but it has moved negatively, well, in the wrong way anyway. So Amero International market cap 177 million. So people do like this company. They do think this company has promise based off the market cap. But sometimes the market can get a little bit silly when it comes to the potential of a company. And maybe they're a little bit too enthusiastic about a company. And that could be true for Amero. But anyway, disappointing announcement from this company. And that's why the share price is down. Otherwise, no company in this list released results today that I remember. ReadyTech. Pretty sure that company, there was a takeover bid for ReadyTech. No, they didn't release results. Okay. So let's get to the top 5 stocks of the day. And after I've looked at the top 5 stocks of the day, I'm going to go through all the other companies that release results. And I'm looking for companies that are possibly breaking out because there's quite a few companies. And that's the whole process I go through is I'm looking for breakouts. And if a company is breaking out, I will take a position in that company. Now, in previous years, I used a bit of subjectivity when it comes to breakouts because I was a little bit biased and I didn't buy every single breakout. And sometimes that was to my detriment, sometimes not. But this year I am trying to leave my bias. I probably will take a position in Temple Webster, share price up 5%, because this company is breaking out according to my rule. I don't have to quote that. According to my rules. So my rules in regards to a breakout, what I am ideally looking for in a breakout is the share price at least at a 3-month high on positive financial news with higher than normal, not expected, higher than normal volume. So if we do look at Temple Webster, do we have those 3 requirements? Yes. So yesterday, the company released positive financial news. Share price went up to about $12 or so. And the last time the share price was $12 was in May, 9th of May, 2024. So we're talking about a 3-month high. Preferably, I'm looking for a 6-month high. So where the share price is right now for Temple Webster, there is a bit of resistance here. So I am preferably looking at a 6-month high, but I will sometimes accept a 3-month high. So technically, Temple Webster has not got to that 6-month high, but yeah, it is at a 3-month high. Some of the other companies, Challenger, this is a breakout. Share price got above $7.20, which is a 6-month high. In fact, it's a multi-year high. Yeah, 18-month high. Share price has pulled back a little bit today, but not a lot, 0.41%. That's okay. The people who are selling today with Challenger, because this is a breakout, with Challenger are those who bought in maybe at lower prices in the past 18 months and now taking profits. Now, we don't want to see the share price fall below 720 and stay below 720. That would mean this would be a false breakout, and they do happen. This is not 100%. There will be some false breakouts. So this sort of rule I use for breakouts is not without misses. In fact, if it didn't miss, I would not be telling you it. In fact, I'd be the richest person probably in the world. Anyhow, that's what I'm looking for. So I'll show you, or we'll look at all the charts of companies that released results today, and I am looking for breakouts. And that's one of the reasons I go through the 3-month high scanner, 6-month high scanner, is I'm looking for breakouts that I might have missed. Okay, so let's do the top 5 stocks of the day. Starting with CBA, up almost 1% today. It was up a little bit higher on open. In fact, the high of the day was near open. I'm not sure why the share price is up, because all the numbers are down. So this company is valued as a growth company. It's not growing. It's going backwards, in fact. The CEO actually said this last year. We're not going to see much growth in this company, but the risk is lower. And so I saw the results and I thought, to be honest, if the market is really honest with itself, the share price should drop. But it hasn't. So it seems like the market is just skipping past the results. I don't really care. This is a high quality company, and I just want to own this company for the long term. Now, I would say this is a high quality company, but not a high quality investment. And I think there is a bit of a distinguishment. So I'd call Woolworths a high quality company, but it's not a high quality investment. And the reason I would not consider Commonwealth Bank a high quality investment, well, right now, particularly valuation and lack of growth. I need to see growth, because That's how you're going to get the supersized returns in the future. You might get a nice little dividend with CBA, but you're not going to get substantial returns from this type of company. Now, if we go to page 57, I do like CBA's presentations. They talk about everything in here. They talk about who's affected by the economy. We already know younger people are more affected by increasing interest rates. The older generation, particularly those with massive amount of savings, are being benefited in these times. They go through many things in this particular presentation. They also talk about why they're better than all their peers. They do that did that quite frequently. Anyway, many pages, 128 pages. So this is their results. That's the whole reason why I went to this page. Oh, there's actually 2 pages here. So here it is. Statutory net profit after tax down 6.1%. Profit or cash NPAT down 2.3%. Return on equity down 30 basis points. Earnings per share down 8 cents. A dividend per share, well, they've increased that. So maybe the market likes that, but that's not a reason to get excited about results when the dividend has increased, but everything else has dropped. That means the dividend payout ratio has actually increased. Cost to income actually increased 130 basis points. NIM down 8 basis points. So that is net interest margin. Operating income flat. Operating expenses up 3%. So if your expenses are increasing at a rate than income, that means, what's that mean? It means the profit is down. So a lot of negatives about this particular year for Commonwealth Bank, but share price is up. And I don't expect much growth. They didn't really, that I saw, didn't give any sort of outlook. Let's have a look at the media release. And I was trying to find an outlook because that's what I'm looking for. I'm looking for an outlook. And usually you'll see the outlook at the end. Just talking about building a brighter future for all. That's not really an outlook there. Nothing there. But anyway, so this is sort of results I probably would expect from CBA. But over the last, say, 10 to 20 years, you do expect a little bit of an increase in their numbers. But here we have negative numbers. And don't forget, it was not that long ago when the experts thought that a rising interest rate environment would be beneficial for the banks. So not so for CBA, probably not so for the other banks as well. But have a look at the chart. Share price is still in an uptrend, even though share price fell a fair bit on Monday. What date was that? That was the 5th of August. So nothing to be too concerned when it comes to the chart. However, the company was overvalued before these results. This company is currently valued as a growth stock. P ratio of this company is probably like 23 right now, and they need growth to justify that sort of valuation. This company needs growth, and where's the growth going to come from? I have no idea. Now, I would become interested in CBA if the share price fell to about $70 to $80. That is where I could see some good value in this company, but that's a long way from now. So coming in number 5, we have CBA, and that's not really a breakout. It's just still an uptrend. So this is not what I'm looking for. And plus valuation. Even if it was breaking out, I probably wouldn't buy any shares in CBA because it's just overvalued. That's my biggest problem with Temple Webster. I just think it's probably overvalued. And even though share price is breaking out, I just wonder how far the share price can rally when it is already overvalued. How overvalued can it get? So I am more concerned about CBA than I am Temple Webster because Temple Webster is growing. Look at their revenue growth. Pretty good revenue growth. Don't see that with CBA. I did want to talk about AGL. I didn't put AGL into the top 5. So I did want to discuss AGL. So I'm going to put that in honorable mentions. Okay. So coming in number 4, we have Orora, and share price of this company is up 6.2%. Now, there was this rejected takeover bid yesterday from a Lone Star. That is not the state. Maybe it is the state. The Lone Star state. A Lone Star Fund 12 acquisitions. And the board for Orora said, get lost. This is an opportunistic takeover. They didn't say that. The takeover bid price materially undervalues Orora. That's what happens when a share price drops a lot. You're going to get these sort of bids, takeover bids, because other people, other institutions, organizations see value, and the board for this company did the right thing, said, get lost. Anyway, let's have a look at the results for this company. I had a quick look, and on first inspection, they look pretty good. Now, what's the three things that could drive the share price higher or lower when a company releases the results? The first thing is, does the results beat expectations or guidance from the investing community or guidance from the company itself in the past? So that's the one thing I don't know about Orora. Do these results beat expectations or the company's past guidance? The other thing is any sort of outlook, any sort of future guidance that can actually drive the share price higher and lower. Might be forgetting one other thing as well, but those are the two things I'm looking at. Particularly, I'm focused on the outlook. If the company releases a pretty good outlook, I will become more interested in a company. But these results, for a company whose share price was in a material downtrend, do look interesting. And I would say that this company could be cheap. P ratio of 10.19. So 10.19. I have to delve a little bit deeper into that. Debt to equity 132. That is a little bit concerning. Let's have a look at the numbers. So total revenue up 9.5%. They also have a constant currency here, so a little bit lower when you look at constant currency. Underlying EBITDA up 39%. So there is a reason why revenue is up a little bit, which is still pretty nice revenue growth for a company like this. But then underlying EBITDA is up a fair bit. Like we're talking about 39%. Underlying EBIT up 26%, and underlying profit up 10.2%. For a company with a PE ratio of 10, that looks interesting for me. Underlying earnings per share at 17.9%. So why has that decreased 19.4%? There must be a reason behind that. Underlying operating cash flow up 47.1%. Dividend per share down. Net debt up significantly from 774 million to 1.75 billion. Why is that true? Has this company done a takeover? Not a takeover. Has this company acquired something? I would assume yes. The company delivered solid earnings and cash flow growth in financial year 24 following the acquisition of Saver Glass, which contributed 7 months of earnings. So that could be a reason why some of these numbers are good. I'd like to see some pro forma numbers. This acquisition was pretty big, a $2.2 billion acquisition. Okay. Yeah, so they do have a fair bit of debt. That would be my major concern for this company. So here is the outlook. So EBIT broadly in line with second half financial year 24 exit run rate, with benefits from transformation and cost management continuing. Volume growth, more weighted second half. That's cans, glass. I don't. The outlook remains subject to global domestic economic conditions and currency fluctuations. Okay, so there's no actual numbers there. So a few things I do want to know a little bit more when it comes to this company. I'd say the reason earnings per share is down is because with this acquisition, they made this acquisition through debt and also through shares, scripts, whatever you want to call it. So there's more shares on issue for Orora. In fact, you can actually find that out. You might be able to find that out by their financial statements. Let's have a look at the annual report, because it is interesting. That's the first thing I just noticed when I was going through that. The underlying earnings per share are down, but everything else is up. So really impressive growth. But again, that's because of this acquisition. So if you look at the earnings per share, 17.9 cents, which means that currently the company is at about a P ratio of 15, which is not as attractive as a P ratio of was it 10? Now, should have done this beforehand. Okay, so I want to see if they have shares on issue somewhere here. So here it is, section 1.3 or notes 1.3. So they're talking about earnings per share in the income statement. And I just want to go to section 1 or note 1.3. And let's have a look, see. 1.1, 1.3, no, 1.2, 1.3. Okay, during the period, the group issued 500 million shares in respect of the equity raising that was undertaken to partially fund the Saverglass acquisition. There we go. And down here, they should have the amount of shares trade or average shares. So weighted average number of shares for basic earnings per share calculation, 1.25 billion. So there is an increase from last year. There is a reason why earnings per share has decreased. So I was quite impressed by the growth in revenue, EBIT, and net and profit, but they made an acquisition. So I would prefer pro forma numbers. And if they did have pro forma numbers, maybe not quite as an exciting announcement. Maybe they mentioned this in the presentation. I don't know. This is the first time I've looked at the presentation. But I do prefer pro forma when a company makes an acquisition. And the pro forma is just what the numbers would look like if they had the acquisition or made the acquisition 2 years ago, or if they didn't have the acquisition. Usually it's if they made the acquisition posts last financial year, so we can just see how the numbers increased with the company they acquired. So let's have a look to see if they do mention it anywhere here. And I'm just saying underlying earnings, no pro forma or anything like that. They might go through how Saverglass did perform, and you could, yeah, they actually, here it is. Here it is. Financial year 24, including SVG, financial year 24, excluding SVG. So we can say, and they can compare that to financial year 23. So actually, revenue dropped about 7%. EBITDA rose a little bit, about 5.9%. EBIT up a few percent, maybe 1% or so. Actually, about 5%, looks like. And profit up slightly, $0.4 million. So there was a little bit of growth in EBITDA, EBIT, and profit if you take away the Saverglass acquisition. That's what I was looking for. So not much growth at all for Orora. So those initial increases in revenue, EBIT, and EBITDA don't look as nearly as impressive right now. Okay, so that's and the chart. Of course, the chart. Is this a breakout? This is the reason why I put this company in the top 5, is because share price in a downtrend, and 2 days in a row where the share price has rallied. This is on the verge of a breakout. The last time the share price was this high was back in April. So we are talking about, what's that, 4 months ago. So a 3-month high, higher volume coming through, positive financial results. I don't think I'm quite there with actually calling this a breakout just now. I'd like to see how the share price and the market reacts over the next few days for Orora. Okay. Coming in number 3, we have Evolution Mining. This one is interesting. Up 7.5%. Overall, mining is down today, so this is going against the tide. I had a look, just this 6-page document, and I went, ooh, geez, these are pretty good numbers. Again, I don't know what the expectations were, but I'm assuming expectations were pretty good, and maybe their outlook, their guidance was pretty good as well. So everything is up a fair bit. So record profit, up 158%. Record EBITDA, up 67%. Record earnings per share, up 147% to 22 cents. Final dividend of 5 cents. So 22 cents per share, which means the company is trading on a P/E ratio of closer to 20 than 10. So maybe not value there. Material deleveraging, gearing now 25%. Liquidity increased to 928 million. So nice cash flow into the company. And when you look at the guidance, they don't really talk about EBITDA, profit, cash flow, but they do talk about production guidance. And they also talk about all-in sustaining costs. The reason they talk about only guidance of production and all-in sustaining costs is those are two things they are in control of. They have no control over gold prices, and gold prices will ultimately control, apart from production and all-in sustaining costs. Gold prices will have a large have a large saying on their profit EBITDA in the next financial year. And they have no idea what gold prices are going to do. They might assume, they do say right here, cash flow will be generated from the combination of the quality portfolio, sector-leading cost position, exposure to copper, disciplined capital allocation, and the outlook for commodity prices, with the gold spot price 560 per ounce above the financial year 24 achieved price. Okay. I would assume, actually, here it is. Here's a good one. So all-in selling costs, about 1,477. So are they forecasting that to decrease? No. In fact, they expecting that to increase a little bit. So it's at the lower end of their range. And production, let's have a look at production. Do they have production here? Here we go. So 716,000 of gold and 67,000 of copper. So they do expect to increase copper production a little bit in this financial year, while gold might increase a little bit as well. But the market has liked these results for Evolution Mining. So is this a breakout? I'm going to be asking that question for all these companies' charts. Is this a breakout? And the question is, or the answer to that is, no, not quite. In fact, the share price of Evolution Mining is at a very important point. In fact, we have seen a little bit of selling today, which is understandable, because when the share price gets above about $4.15, the share price struggles for this company. So this is not the breakout I am looking for. If the share price was about $4.30, this would be a breakout, by the way. And it's not a breakout just yet. It needs a little bit more work. Evolution Mining. Okay, that's coming in at number 3. Coming in at number 2, we have 7 Group Holdings, or they call themselves SGH. So we have 7 Group Holdings. They own like a bit of 7 West Media. They own Caterpillar. They own a fair few mining services, that sort of thing. And 7 West Media also released the results, but that chart looks horrendous. Okay, so share price up 6.6%. The results of this company were pretty good as well. I like these results as well. Nice growth. We're talking about 10 to 15% growth in, I'm just guessing this stage. Not guessing. I'm trying to remember because Comsec's taken a while. I'm just remembering 10 to 15% growth in most of the metrics. Let's have a look. Revenue up 10%, EBITDA up 14%, EBIT up 20%. So nice growth in margins there. Industrial services businesses up 28%. Westtrack EBIT up 25%. Laurel EBIT up 61%. Coates EBIT up 9%. NPAT up 30%. So really good, nice growth in margins. So when you go revenue up 10%, profit up 30%, that means margins have increased. Operating cash flow, 1.3 billion, down 16%, reflecting working capital investments. So that could be, that could be quite a few things. We're talking about trades payables, trade receivables, inventories, that sort of thing. Final dividend of 30 cents, up 30%, and have also guided for high single-digit EBIT growth in financial year 25. So nice growth this year, expecting nice growth in financial year 25, solid growth, 8% or so. And the market, or the current valuation of the company, was not that rich. P ratio of about 16.73. And I would take that sort of growth for a company with a P ratio this low. So if you just compare this company to CBA, what would you prefer? This company that is growing at a P ratio of 16, or a company that's not growing at all, probably will not grow, and has a P ratio of 23, 24. I would choose this company every day of the week. Doesn't mean I'm going to buy shares of this company, but definitely this is a better quality company in terms of what I look for than CBA. Now, next thing is the chart. Is this a breakout? Oh, now this is interesting because I did put this line here. This dashed line is a downtrend. You can see the share price was, every time it hit this dash line, sloping dash line, it pulled back. Today, it's pulled through that. So even though the share price is not at a 6-month high or 3-month high, we have seen okay volume coming in today, not huge volume. This could be the end of the short-term downtrend for 7 Group Holdings. So an okay chart after the share price went on a beautiful rally, beautiful 2-3 year rally with 7 Group. Share price went from $19 up to $42, so more than doubled over a fairly short period of time. So yeah, I don't mind this company, don't mind the chart, and the numbers look pretty good for 7 Group Holdings, and it's also diversified. I like the diversification in this company as well. So that's coming in number 2. We have 7 Group Holdings. Probably the best looking chart just at this point. out of all the companies we've looked at. Orora probably coming in second. Evolution, well, CBA chart looks pretty good, but just have no interest. But coming in number one, it had to come in number one. Pro Medicus. It was up nearly 10%, up 8%, which is insane for a company like Pro Medicus, which has a PE ratio of 190, 175. Sorry, Pro Medicus. I thought your PE ratio was like 190. No, it's only 175. So this company had to show it is still growing at a fairly significant clip. And I suppose it did it. They also released a CEO interview. Let's have a look at results first. I haven't looked at the presentation. Probably don't need to look at that. So I expected growth, 30% growth in revenue, profit, all that. I wanted at least 30% growth, because if I didn't see 30% growth, then there could be concerns with the share price. The other thing I would be closely eyeing off are the margins. If we started to see margins decreasing, that would be a concern. So let's have a look at the numbers. Revenue up 29.3%. So initially that could be, ooh, it's only up 29.3%. But underlying profit before tax up 35.3%. Profit up 36.5%. So revenue or profit increasing at a greater rate than revenue. So right there, margins are expanding, and they are. Underlying EBIT margins increased to 69.5%. Cash and other financial assets up to 155.4 million. They are debt-free, and a dividend of 22 cents. But dividend really for this company is just a token dividend. So nice growth in all these metrics and margin expansion. So I can sort of see why the market might be excited about the results. However, valuation does matter. The other thing you should note is that the gross profits for this company are insane. So revenue 161.5 million, but profit, so the profit margins, profit of 82.8 million. So profit margins are just extreme for this company. There are some companies out there who have revenue of 161.5 million and are unprofitable. They can't turn that revenue into profits. That's why Pro Medicus is beloved by a lot of investors out there, because of the margins. Whenever this company increases revenue, if they increase revenue by $30 million, a lot of that will fall to the bottom line, to profits. So at least half of that will fall to the bottom line. And this company just keeps on releasing contracts. Now let's have a look at the quick CEO interview. So what are your general thoughts on full year results? Another record year for Pro Medicus. You just sense here it's all moving in the right direction. Not just in terms of revenue and profit, but also other metrics like sales and implementation, something I don't really think about. Anyway, how difficult will it be to continue these growth rates in the years ahead? That's a pretty good question, because the market is expecting the growth to continue for many years ahead. We're talking about 10 years. I should do a DFS on this. Did I say discount, like a free cash flow, whatever you call that, just to see. In fact, no, I won't do it now, but I just want to see what sort of growth this company has experienced in the next 10 years to justify the current valuation. A reverse DCF. That's it, DCF. Did I say DFS yet? I don't know. So I'd like to do a reverse DCF, reverse discount, or whatever. You know what I mean. Just to see what sort of growth rate this company has experienced in the next 10 years to justify the current valuation. I think 30% might be about where it needs to be. Anyway, clearly maintaining, this is what he says, maintaining growth rates of 30% plus year on year gets harder as a base gets bigger. That's the truth. So if this company continues to grow at 30% per year, that is actually even more impressive. Our clients are growing well above industry average. If they grow, we grow. That's interesting in itself. We also had a record year in terms of new contract wins. That's one thing I did notice. The result was largely driven by a 34.4% increase in revenue from North America. What is behind this growth? Well, they're selling more contracts in North America. You probably didn't say that. EBIT margins have increased steadily from 53% in financial year 20 to 69.5% this year. This is one of the reasons why the share price and the valuation of this company has increased. Increase in margins. The only problem I have with that is only so far margins can expand. It's like cost reductions. There's only so far cost reductions can go, and margin expansion can go. At some point, there is a limit. There is a limit. Uh, Technically, there is a limit. 100% is the limit. It will never get to 100%. That's always why I tend to focus on revenue first, and then I look at margin expansion. If you get the two moving in the right direction, with like we have with Pro Medicus, revenue growing, margins also expanding, that's a good sign. But eventually, the margins won't expand. Okay, you can have a look at this yourself. So, a pretty good results for Pro Medicus. But is this a breakout? Now, I am a shareholder of this company. I have a long-term shareholder, but just because I own shares doesn't mean I won't trade Pro Medicus. When I say won't trade Pro Medicus, doesn't mean I won't take a trading position. Like if I see a breakout, I might take a trading position. I did that with JB Hi-Fi. Yeah, I bought some shares the other day because JB Hi-Fi had good results. Share price looks like it's breaking out. Well, maybe not breaking out is the right word, but not quite. A lot of volatility in Pro Medicus the last few months, and I just think there is some questions about the valuation. So more than likely, I won't trade Pro Medicus. In fact, if anything, I probably would take some profits in this company. I just can't see how there can be any more multiple expansion. I don't think the P ratio of this company can get anywhere higher than it is right now. I could be wrong, but I don't know. Anyway, by the way, I just mentioned JB Hi-Fi and Pro Medicus. Now, the best type of breakout is when the share price is going sideways. So for a long time, and then you see a breakout, that actually is more powerful. When you see the share price in an uptrend, and then the share price increases on the back of good financial results like JB Hi-Fi here, that's not quite as powerful than the breaking out of a consolidation period. I just want to put that out there. And in fact, a textbook I did read, or book I did read, actually verified that. I think this could have been, yeah, I think it could be, I forget which book. I was trying to remember which one I did read. I did read that, and it makes sense to me. And that's probably an important thing. If something doesn't make sense, you might have to read it a few times for it to sink in. But this made sense as soon as I read it, because I have seen that with my own eyes. When you see a share price breaking out of consolidation period, that usually is a good thing. If the share price is already in uptrend, yeah, not quite as powerful. Okay, so that's the top 5 stocks of the day. I just want to discuss AGL, because this one went in the different direction I thought it was going to go. So AGL was up at one point today about 4 to 5%. So it has pulled back a little bit, not a lot, but up 1.85%. Okay, so they released their results and financial year 25 guidance. And I am trading this, by the way. So let's have a look at the chart for AGL. So this was a potential, yeah, this one is an uptrend. So I bought at 9.18, bought some more at 10 on a good financial announcement. And this could have been potential another buy for me. One concern I did have when I saw these results and the guidance was the negative outlook for next year. And it was pretty negative. I thought the share price would have sold off a fair bit. So really nice growth in profit, underlying EBITDA, that sort of thing. So we're talking about significant growth. Underlying net profit up 189%. Underlying EBITDA up 63%. Final dividend of 35 cents. So total dividend 61 cents, which means a dividend is quite nice. We're talking about 6% dividend yield or something like that. But then on to the guidance for financial year 25. EBITDA between 1.87 and 2.17 billion. This year, it was 2.216 billion. So they're actually forecasting EBITDA to drop in financial year 25. And net profit this year was 812 million. And they're expecting profit to drop to between 530 and 730 million. So I was thinking, oh, the market's not going to like that. Pretty negative guidance. And they actually did talk about somewhere why they're expecting guidance to be down. Was it in this announcement? Yeah, here it is. There's like 4 bullet points why they're expecting worse numbers next year. So lower wholesale electricity prices, consumer margin compression, broadly flat operating costs, something else, increased depreciation amortization due to continued investment in the availability and flexibility of AGL's assets. So I thought the share price would sell off on this. No, increase. So just shows you I can be wrong. We all can be wrong, particularly when it comes to the market. So the market, for some reason, likes these results and doesn't mind that forward-looking guidance. Maybe that guidance was to expectations, or maybe that guidance actually beat market expectations. I don't know. So that's AGL. Now I'm going to go through some charts of these other companies that released results today. So bear with me. LIC released results yesterday. Is this a breakout? No, it's not. Share price in a downtrend. No end in sight. Share price has recovered a little bit. Share price did get below 850 at one point today. But no, I have no interest in this chart. In fact, if anything, I'd be looking at, is there any value in lifestyle communities? I did that with Horizon. I saw some value and I took a position because the chart looks horrible. And now the share price is higher from when I bought. Go Horizon. It's moved into this purple box. And when the share price moved into the purple box, I got a little bit excited and went, oh, I buy some shares in Horizon, hoping. Maybe hoping is a wrong word because you shouldn't buy shares on a hope, but on the theory, the premise, the share price will bounce. This is a support layer or support zone for Horizon. Now, they released the results the other day. Computer Share released their results last night. Share price, meh, or the chart, meh. No interest in Computer Share. We'll skip a few other companies. Like there's a company called TIA, Tian Australia. We'll skip that company and move on straight to Seven West Media. Chart has been looking horrendous, still looks horrendous. I have no interest in Seven West Media. Seven West Group, or whatever it's called, Seven Group Holdings, much better than Seven West Media. In fact, I did have a quick look at their results, and as expected, everything's down. In fact, I do know someone who works with Seven. I won't say who, but this person is on TV every single night, and they are. He was a little. Last time I talked to him wasn't that long ago. He was a little bit nervous, put it that way, about his job with Seven because there is a lot of cost cutting, a lot of positions being culled, and I think that's true throughout the media industry. So that's one of the reasons. This is one of the reasons why, and also it's a traditional media platform that is losing interests. In fact, I never watch the news anymore on TV. In fact, I don't watch TV anymore. If I'm watching TV, I'm either streaming it or, just streaming it. I don't watch commercial TV anymore. In fact, the Olympics, I just watched 9 Now. So their apps are much better. Anyway, in fact, I didn't watch 9, the commentators. I watched the international broadcast of the Olympic Games. Way better than the local broadcasters. I'm going to say that. Way, way better. Give me those broadcasters, those commentators, any time of the year. No bias. I don't want any bias. I just want to see the competitors for every country run, and that's what I got. No Australian bias. It was good that we had a good year, but I don't want that bias. Anyway, Seven West Media, no interest. The only thing could be maybe value. You can see back in 2020, share price fell to 6 cents. So there was value there and a nice little bounce in the share price. That was a 10 bagger if you bought near the low and then sold near the top. Okay, so Seven West Media, no. A few REITs. What's this one? Charter Hall Social Infrastructure REIT. No, still in a downtrend. We've already talked about AGL, home, some sort of home. Homeco Daily Needs REIT. I think this company owns Woolworths, stuff like that. Not Woolworths. They own stores at home Woolworths. And the chart says no. I've already looked at CBA, SVW. Company called Automotive. Used to be called GUD Holdings. No. Share price is up 5% today, but still no. BTI, Ballador. I do like this company. So this is like an investment company, and a lot of the investments are tech companies that are not listed. They do own a bit of SiteMinder and Straker, and the company is trading significantly below their net tangible assets. But the chart says no to me. Share price up 2% today. Orora, I've already looked at that. Company called AII, Almonte Industries. No, that's Canadian. Almonte Industries. I don't know anything about this company. Market cap $197 million, but no for me at this point in time. Bravura. This one I thought might be looking a little bit interesting. It's trying to break out. There is a nice little support level at $1, as with a lot of companies, and it's trying. But I do think there's a fair bit of resistance because of this zone here back between February. So when the company released the results in February, share price rose 30%. But between February and about May, so it was about a 3-month period, roughly, where the share price was higher than it is now. So there is a bit of resistance moving forward. And we have seen that a couple of times in the past month or so, where the share price tried to rally, but too much selling. There was too much enthusiasm from the sellers. And I think most of those sellers would be those who bought a higher price in the past, between February and May. So it's trying to break out, but not there just yet. Plus, not the biggest fan of the results because of the lack of growth in revenue and forecasting revenue actually to drop in financial year 25. What else do we have? BWP. I just think of Weeper when I think of this ticker code because the airport ticker code for Weeper is YBWP. Yeah. This is Bunnings, I suppose. Bunnings Trusts? No. Evolution, Dexus Industria, I think. Dexus Industria REIT. I would assume no. Share price is actually down today. That's interesting. VVA. This is the last one. Now, I might have missed some because I haven't looked recently at the announcements. Viva. Is this a breakout? No. So no breakouts. The only one really close to breakout, I probably am most interested in 7 Group Holdings, SVW. Orora looks okay. CBA, the chart looks good, but not interested in taking a trading position in that company. Medicus looks okay as well, but overvaluation. And Bravura does look interesting, but I'm not quite there yet with that company. And AGL, that also looks interesting, but a little bit of pullback in the share price today. That is a little bit concerning. So I'd like to wait and see if the share price can go higher over the next few days. Okay, so that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.